Can Ethereum eventually rise to some truly insane prices? Could $20,000 per Ethereum actually be possible long term? Is it possible it could go even higher? And if such insanely high numbers are actually possible, then what will be the catalysts that we need to get the price so damn high? My name's Lark, and every day I make videos to help you make money in crypto. So if that is what you want to do, subscribe to the channel, hit the thumbs up button, hit the bell, and make sure to catch all of my videos. By the way, if you want to earn a safe and simple passive income on your cryptocurrencies, then you need to get yourself a BlockFi interest account. So you can earn 5.25% on your Ethereum, 6% on your Bitcoin, 6.5% on your Litecoin, and 8.6% on USDC dollar stablecoins. And as a special bonus, if you sign up using the link down below in the description, then you can get up to a $250 Bitcoin bonus. And who doesn't love free Bitcoin? So go ahead and check that out if you want to get some sweet passive income. Okay, so let's get into this. Here are the reasons that I think Ethereum could actually hit these truly insane price prediction numbers that we see bantered about from time to time, $20,000, potentially even more when we kind of factor in some of these unique value propositions over the coming years. The first idea here is that institutions will start entering heavily into Ethereum. And as we start seeing more and more social proofing for Ethereum taking place, it'll become safer and safer for institutions to enter Ethereum. Exactly like is happening with Bitcoin right now. We have people like Tesla buying Bitcoin. Big institutions will also buy Ethereum. It's only a matter of time. And just what is it that they'll be buying? What will be the value proposition for these institutions to enter Ethereum? Well, they will be buying the premier internet bond and a revolutionary tech stock packaged as a completely new asset class. It's a very compelling narrative. One of the reasons that so many institutional players are kind of sleeping on Ethereum right now, they simply fail to understand what the actual value proposition of this unique asset actually is. Ethereum essentially acts as an index fund for the entire Ethereum ecosystem. So Uniswap and Aave and Synthetics, all those really big DeFi applications, they all live on Ethereum. What about tokenized commodities? Things like, tokenized gold living on Ethereum. Tokenized Bitcoin, that's on Ethereum too. Stablecoins, USDC, USDT, DAI, all the varieties, almost completely on Ethereum. NFTs, big trend right now, almost exclusively on Ethereum. The more success that all those niches have, the more success Ethereum will have, since you need Ethereum to use any of those different use cases. So it's very, very bullish for Ethereum overall and gives you exposure to all that stuff. Investing in Ethereum is also like investing in a high growth tech stock, except it is one which will totally revolutionize all markets. The stock market, the bond market, the real estate market, the commodity market, the art market. Really all of finance stands to be disrupted by the power of Ethereum. Which leads me on to the final point of why hundreds of billions of dollars of institutional money could flow into Ethereum. The dividend, man, the dividend. Ethereum staking rewards are a unique value proposition for Ethereum. No stocks pay out more of themselves. So if you hold Apple stocks, you actually get cash, not more Apple stocks, right? But that is exactly what Ethereum does. You get paid out in more Ethereum. So it's not technically a dividend, but it's the staking reward, right? So the more Ethereum you hold, the more Ethereum you can get. In fact, Ethereum 2.0 is going to totally change the game for Ethereum because it's actually going to completely realign the economic incentives for Ethereum. Right now in ETH 1.0, miners are incentivized to constantly sell their cryptocurrencies in order to pay their bills. So they're always selling ETH, creating a constant selling pressure for Ethereum. Whereas staking, that's going to encourage hoarding of Ethereum because the more you have, the more you can get. This makes it more likely that lots of the supply will be locked away, providing for more scarcity on exchanges, of course, which is provides that fuel for the price to go up long term. Especially when we combine it with EIP 1559. This is the upgrade that will introduce fee burning to Ethereum. It'll actually make Ethereum into a deflationary asset, which is very compelling. This upgrade is expected to happen within potentially the next few weeks, more likely the next couple of months. But by the end of the year, Ethereum should have EIP 1559 implemented, meaning that by the end of the year, Ethereum could become a deflationary asset. Now, the current inflation rate for Ethereum is around 4%, approximately. So that's a lot, even for EIP 1559 to cover in terms of burning off Ethereum. But with the insane gas fees that we have right now, we could see a situation where the inflation for Ethereum would drop dramatically with EIP 1559. Maybe we'll go down to like 0.2 or 0.3%. Maybe we go slightly negative, minus 0.2% or something like that. But when ETH 2.0 launches, in 2022, those burns will definitely outpace inflation, since inflation in Ethereum 2.0 is actually going to fall down to around 0.5%. So if, for example, 3% of the supply is being burnt a year due to EIP 1559, then that will result in a net loss of 2.5% of the supply a year. Now, that may not sound like a crazy amount, but do the math. Stretch this out over a few years and you'll start to see the impact. Now, if this were implemented today, then it would result in a burn of around 2.85 million Ethereum for 2021. That could see, with these kind of numbers, we could see 20% or more of the supply of Ethereum burnt by the end of the decade. Think of this like a stock buyback, right? This is something that has served as a very effective tool to pump up the valuations of stocks over the last years. This will be programmed straight into the protocol. It's going to completely shake up the economics of Ethereum once again. So with these massive economic forces coming to Ethereum right now, staking, fee burning, incredible stuff. It's going to really dynamically shake up the way that the economics are working, meaning that we could see these crazy price valuations, $20,000 or beyond, right? And I believe that this cycle, these things could happen. These things we're talking about, though, they're not overnight price catalysts, right? It does take a while for this stuff to kind of come to fruition. It will take a long time as well for institutions to really pile into Ethereum the way they're piling into Bitcoin right now, or even into, they have traditionally piled into things like Apple. But the burns from EIP 1559, they will be super impactful. It might take years to see significant portions of the supply burned, but even the 3 million Ethereum disappearing over the next year would be massive. I still think we can get these just crazy valuations during this bull run. Ethereum's going to still surprise a lot of people. 10x from here, not that crazy. But if we zoom out and look towards the end of the decade, maybe we can actually start talking about Ethereum getting some truly insane valuations. $30,000, $40,000, $50,000 when we start talking about deflationary assets, institutional money coming in, unique value propositions. It's possible. But anyway, what do you think? Can we see Ethereum reaching some truly insane valuations? Is $20,000 a realistic price target for Ethereum? Could we, by the end of the decade, see $40,000 or $50,000 Ethereum? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.